There are a lot of moving parts to this. Is this an OPEC plus meeting that could yield a potential game-changing catalyst? It doesn't seem like traders and investors are viewing it that way right now.
Good morning, Dom. I think it probably will be very dependent on where we see the price action into the Friday session, basically what levels we are seeing heading into the weekend, because at these current levels, I don't think they will do anything additional in terms of cutting production on top of what they did already for this month, simply because we don't know the full impact of these lockdowns in China yet. There is real-time data basically suggesting that the mobility is not hurt to the extent that warrant the big drop we've seen in oil prices during the last week. We also have, as you mentioned, have the embargo that kicks in from next week, and that will likely lead to another drop in supply. So I think with that in mind, they're probably going to keep their powder dry for now. But surely a level at 80 or below is not a price that they would have envisaged just a few months ago, considering it's more or less back to where we started the year.
I mean, Ole, the chart, we're showing the chart right now for Brent and WTI, U.S. benchmark prices. I mean, there's no doubt. It's a long to medium-term downtrend, medium to long-term downtrend here. What prices are OPEC and its partner countries looking at to try to stabilize crude at? We've also then heard some rumblings from the Biden administration about how there could be a look to replenish our strategic petroleum reserve, the SPR in the U.S., around $70 a barrel if it were to happen. So what exactly is OPEC trying to figure out in terms of its equilibrium or ideal price?
Well, I think first and foremost, trying to work out what is the actual demand out there right now. And they saw some weakness entering into November, leading to the cut that they made. But the cut so far has probably evened out the reduction we've seen from China. So with that in mind, they will just continue to keep an eye on demand. Obviously, we're also somewhat concerned about the availability of supply, given the embargo that kicks in. So I think having heard the head of the energy minister from Saudi Arabia talk about the 90s on a regular basis, I think that is really the area they would like to see oil trade within at a relatively stable price action. So I would imagine that a break below 80 is clearly not in their interest, and it's not one they see as being, you can almost say, fair, considering what we have been through so far this year with the war in Ukraine, with the sanctions against Russia, with the global demand still rising, that they don't feel that a price below 80 is warranted at this point in time.
Ole, before we let you go, you mentioned the Russian oil sanctions looming. We've got those price caps kind of in play coming up here as well. Is it going to have an effect on oil prices? Right now, it doesn't seem like it's at all impactful in a meaningful way to what's happening to upside price moves.
Well, at the current levels, most certainly not, simply because euros is already trading at a discount of more than $20 to Brent. So it will be well below the kind of price cap levels that has been talked about. So I think for now, it's probably, to a certain extent, almost dead in the water. They may be revisited if we suddenly see a fresh spike in oil prices. But at this point, it's more the actual embargo on seaborne crude, more than the talk about a price cap that could potentially underpin the prices over the coming weeks.